Hi everyone, welcome back to our channel, The Accounting Edge. In our last video, we discussed about the definition of accounting and the types of accounts. Today, we are going to discuss about the journal entries, ledger and the trial balance. Before we start, we have to know about the double entry system, accrual accounting and the chart of account. Double entry system we already discussed in our last video. Regarding the accrual accounting, it's very simple. Whatever the expense or income occur, we have to record it at the same time. That means no need to wait until the payment is done or what we receive the payment. For the chart of account, it's very simple. It's the list of all accounts and it categorized based on assets, liabilities, income and expenses. You can see here in our example, we categorized assets, liabilities, equity, revenue and expenses. And also you have to note that we have to give specific numbers. Like for here we make for assets 1000 to 1999. And for liabilities we make it 2000 to 2999. And the same we will give it to equity, revenue and expenses. Now let's discuss about the journal entries. The journal entry is also called the book of the original entry. And the journal entry is the basic record. So you know that one, it is the first entry we have to make for all the accounts. And also we record the journal entry step by step. And also we have to check always the debit and credit is equal and so on. And we can know what happened to the entity's cash. The journal entry contains mainly three parts: debit, what it comes to business, and credit, what it's go out from the business. The narration is a short story about the transaction. And you know, we have to apply the golden rules for each transactions or each journal entries. Here we have 5 examples, so we can look into one by one. The first one here, the owner bring the capital. So here what we make the entry, cash account debtor to owner's capital. And you can note here, there is cash debit, that is cash come to the company, and the owner's capital we make it credit. That means the company owe this money to the owner. And you can see here we make the narration and what is the story behind this transaction, owner's initial capital investment. And you see here that one, debit equals credit. The second journal entry, the company bought the equipment by cash. Here we make equipment as debit and cash we make it credit, and also we make the narration as purchase equipment for cash. The third one, the rent is paid by cash. And we make journal entry as rent expense debit and cash credit, and we make the narration as rent paid for the month of which month, that one we can mention. And the next entry, it's a credit sale. So here we make accounts receivable account debtor, the sales. And the last one from our example, it's a salary expense we paid by cash. Then the entry will be salary expense debit and cash is credit. In all our examples, we apply the golden rules. The golden rule, you know that one for all the types of account, real account or personal account or nominal account, which already we make it a video previously. Here we applied the golden rule to all our transactions. For the real account, what is the golden rule? Debit what comes in, credit what goes out. Here you can see the cash. In the cash related transaction, we make debit for cash once it's come to the company, and we make cash credit once the cash go out from the company. Same it applied to other types of accounts also. Now we are going to discuss about the ledger account. The ledger account, it's also called book of final entry. And what is the ledger account? It's categorized and organized into specific account. And it summarizes all the transactions. And you know the balance of each account. Here we make the example for the ledger account. This example taken from our previous journal examples, journal entries. So here we make the example of cash ledger from our journal entry example. So you can relate this one easily. Here we categorize the cash transactions. Here you can notice the cash transaction details, what it comes to the company and what it's go out from the company. From our first entry, the owner bring 10,000 cash to the business. Here we mention it's debit. So it's showing the balance, it's 10,000. And after we make some expenses or some payment for the purchase of equipments, rent expense or salary expense. So it's deduct from this 10,000 and you know the final balance 3,200. So it simply say it's we can track and monitor all the transactions for each account, and you know what is the current balance at the end of the specific period. Here we give the general ledger summary. You can see here all the accounts from our journal example. Cash account is there, owner's capital account is there, equipment, rent expense, accounts receivable, sales, salary expense. All accounts are here. You can see here what it's come to the business and what it's go out from the business, and also there is a balance, how much is the final balance for each account. You have to notice one more thing. For real account and personal account, it's always carry forward to the next period because it's all balance sheet items. For nominal account, it's settle or close the current period with P&L account. Net result we will transfer to the balance sheet. Now we are going to discuss about trial balance. In simple words, it's a summary of all ledger accounts, and we can say it's list of all ledger accounts. While we are preparing trial balance, we can check the arithmetical accuracy because in double entry system, every debit equal one credit. Once we confirm all the debit equals to credit in a trial balance, that means what we prepare, it's all correct. If it's not matched with the debit with credit, that means we have some errors. So we have to check why it's happened. Sometimes it's maybe a wrong entry or a wrong amount. And trial balance, it helps to prepare the financial statements. That means from trial balance, we will start to prepare the financial statements like profit and loss account, balance sheet. Here in our slide, we prepare the trial balance from our previous example. And here what is visible in debit side? It's cash, equipment, rent expense, accounts receivable, salaries. And in credit part, there is sales and owner's capital. And here it's matched the total 12,000 in debit side and 12,000 in credit side. As we mentioned previously, if debit is not equal to credit, that means we have an error. So we have to check. Maybe it's because of the wrong entry or wrong amount. This is about our today's video. And we know the account is a big topic and it's really hard to explain everything in a short time. And in our next video, we will come back with profit and loss account. Thank you.